Hello, everybody. Jim Malone coming to you live on Dallas Trading Floor. It is Tuesday, and the Nasdaq is just roaring. It seems like we're making a new high, which is kind of amazing, considering. Uh, but we pulled back, and it just seems like, hey, we may be at a new high for. They're just adjusting my new camera, my new old camera actually. It's an old eyesight camera, but it seems to work better than my other cameras. So hopefully this will work well. Um, but the Nasdaq is at an all-time high. Very interesting. And yeah, let's get to some of the charts here. Basically, we have a very interesting thing is going on. I want to show you a stock that's breaking out. Now, this is an odd stock because it's in an area that I have had very good success in. It's in the retail shoe area. Retail. God, who would have thought retail would be a good category? But all my charts are showing this. And this one is just broken out. So this is something that you might want to consider. It's in a buy zone. It is right now, as we speak, doing very well. They had some tremendous earnings and their profits really, really went up. So I guess I don't know why these shoe stores are doing so great, but Shoe Carnival is one of them, and then this one is also. So, take a look at this one. Take a look at this. Some symbol on this one is let's see if I can see it. Yeah, it's GCO. It's on the New York Stock Exchange. It's a long time stock. They sell shoes, and for some reason, they're doing very, very well. There's a breakout. My charts say that this one is a good one, so who knows? I mean, it's always interesting when you look at these things technically. Also have another one that I did buy some a little bit more in today. It's also breaking out. It's called Trex. It's the plastic lumber company. Wow, plastic lumber. Can you believe that? It's doing very, very well too. It's in the buy zone. I bought this one yesterday. I also bought a follow-up position in it because it's just acting so well. It came through earnings very, very nice. I guess it's because people are adding decks on. I don't know what's going on. Don't know why this is doing well, but it is. So it's that one. Another one you want to kind of look at Trex, Trex. And I'll show you a stock that I've been buying more of today, and it's Macy's. Macy's. Now, why would Macy's be doing well? I don't know why Macy's is doing well, but I do know this. They're going to be merging. Basically, they've got the Toys R Us brand. Looks like that's going to be in all their stores. So after a long drought, it seems like, with the retail apocalypse, it seems like Macy's may be one of the last standing. So I've been buying this one today too. Macy's. And last but not least, Airbnb. And I bought that this morning and look at it, it's up 9%, which is kind of phenomenal when you think about it. I mean, Airbnb is good, but who knows what's going to happen. But this is another one that I've been buying. Just want to show you, it's the stock of the day. Interestingly enough, it's got this cup with handle formation and people seem to like it. Now, all of the other ones that I bought essentially are in the retail category. Retail's doing really, really well right now. Don't know why, but it really is. And then, of course, Airbnb. So, kind of want to show you what I'm in currently. I'm in Apple. It's up just ever so slightly today, a half of a percent. That's not very much, but it's up. Palantir, that reversed and that's moving higher. I was waiting and waiting and waiting to buy this one. It reverses higher. I buy more of it. So, this is another one I bought more of today. It's Robert Half. This is the temporary staffing company. It's one of the biggest out there. They seem to be doing very well. I've had this one for several weeks. I'm up very, very nicely on this one. Berkshire Hathaway, it's up just slightly, kind of even. I may be, I bought this as a protective um, play, but it seems as if it is, I don't know. It's doing the Berkshire thing, it's just kinda going along. Now, I did sell Capital One Financial today, not because it was not good, it moved up today, but because I wanted to reallocate to some little bit faster moving shares in my portfolio, but it moved up nicely, I sold it into strength, and that was basically it. So, down a little bit on ST Micro, of course, this is the automotive chip company that I really like. I've been holding Goldman Sachs. This one's doing well. Now, if the interest rates go up, we're likely to see Goldman do fairly well because they don't get their income primarily from lending, from consumer lending. They're primarily a trading company. So even though they are considered to be in the area of even though they're in the money center bank area, they're really kind of different. They're a little bit different than a Wells Fargo or a Bank of America, which are more consumer facing. Goldman tends to be more industrial and more facing towards the trading aspect. So I do expect that this will do well, even if interest rates go up, and it does look like that's the case. Now remember, they are going to probably try to raise the debt ceiling. We don't know if that'll happen, but if it doesn't, then interest rates definitely will go up. And of course, they may hurt the some of the growth stocks, but it just seems like there's been a rotation, once again, and so I think Goldman should do well on that. Of course, we talked about Trex. This, of course, is the plastic wood company. Very interesting company. I mean, they have a product basically that people pay them to take away their waste, and then they make it into lumber. So I don't know. It's just doing very well. Matson Line. This is the last of the Mohicans. This is the last U.S. based container company. I do think they're going to do well. There's been a lot of action in some of the Greek shipping lines, which they're doing very, very well. And also, of course, there was a special dividend on Zim, which is the Israeli national. So the shipping for some reason is doing very, very well, and I just don't understand why, but it is. And I have Matson now. If you have one in this area, it's probably one's enough. But there's some other very good shipping lines that we might want to look at. Macy's. Now, interestingly enough, Macy's is a leader in the retail department stores, and right now the retail department stores are the number one sector in the stock market. So that's why I'm in there. Also, as you know, I'm a long-term Nvidia bull. It's down a little bit today. I do think, though, it will see some strength. We'll see what happens with it. I did sell my position in Snap. I did sell my position in Snap. I just think that it's getting ready, but it's maybe not there. So I don't have this one, but I did sell my position in Snap, and then I bought the Airbnb today, and the Airbnb is doing just fabulous. So very interesting with stuff that's going on here in the market. And so hopefully everybody that's listening we newly added some people listening to us on LinkedIn. So if you want to ask a question, we are fully integrated with the LinkedIn platform. So all you can, it's very easy to just type in a question and we'll try to answer it to the best of our ability using using the charts and graphs that we have. So thank you very much for holding on. I appreciate it. Let's take the first question. Thanks so much. Thanks. Hey, thank you. Let's look at AMGN. Amgen. Okay. Haven't seen a lot from Amgen in a long time. It's just it's a very, very good company, as we know. But I just want to kind of take a look and see kind of what Amgen is saying. All right, let's look at the chart for Amgen. Kind of interesting. It seems to be moving up. Let's see if we can put that chart up here. Oops. Oh, oh well. Hopefully I'll get this right. Let's see. Okay, great. All right, here we go. For Amgen, the chart for Amgen. Let's go to the daily chart here. This is in the biotech area. This chart, unfortunately, and I kind of want to zoom in a little bit on this. Yeah, let's make sure I'm over on the right one. Zoom in a little bit. This will give us a little bit of magnification so that we can actually see what's going on here. Okay. And let's go over here to the chart. Well, as you can see, we're kind of pulling back on this, on this chart. It is, we basically made our high up here at 261. We've been pulling back, and right now we're at the bottom of the consolidation. Called the consolidation here. So here's the thing: I would think on Amgen. I don't think this is necessarily a good time to buy it because it's got a very low relative strength, And I don't think the checklist is very good. So, but let's just take just a look at the checklist to see. Yeah, 33%. This just isn't working very well. It fails on most of the categories that I look to buy when I'm buying. It does have more than five funds in it, of course, because it's a massive biotech company, but it just fails on everything else. The earnings per share is in the bottom. It's in the bottom 80%. Remember, this is the 80/20 rule. We want to see it in the top. We want to go with the leaders. The relative strength is less than 80, which is not so good. It's not being accumulated right now by many of the funds. The sales are down for last quarter, and the earnings per share are off. It does have one good thing going for it, though. The price is above $10, so therefore it's investable. But, I just think you got to be super careful with Amgen right now because it just doesn't look good. So here's my take on Amgen. I just want to check a few more things. I want to kind of check the sales. That's always a key thing that we want to look at here. But looks as to me as if we have a situation here where the sales are not as good as we would like them. They're up 5% and the profits are up 4%, but it just is not. We want to see 20% here. So my take on Amgen is probably not a good take. Okay. So I probably would not be an investor in Amgen. It just if you're in it and you're down more than about 7%, consider selling it. Why? Because you can take that money and you can place it somewhere where it's going to move faster. I even sell every once in a while. I will sell stocks even that are up, but they aren't up enough. And I like to see, if I get into a stock, I want to see a 2 to 3% bump, probably within the first week or so. But I don't think you're going to get that on Amgen. I just don't. So let's look at TMUS and see if we can take a look at that one as well. T-Mobile, again, not a particularly great area as you can see here. It's 94 out of 197. So this is not in the top 20%. I typically like to buy stocks where the market is going, where the market is moving. And unfortunately with T-Mobile, that is not the case right now. The chart itself is not all that bad. We do have an ascending chart on the weekly chart. Let's take a look at the daily chart. We do have an ascending chart. So that is indeed good. But as you can see, we're in this consolidation range, and the top area, the buy point on T-Mobile is 150.20, and right now, unfortunately, it's pulled back. Now it looks like it may be moving higher, but here's the thing: I wouldn't be a buyer of this one either because I want to buy it. I want to buy on strength. I don't want to buy on weakness. I don't want to buy when the relative strength line you see is moving downwards. So this was stronger back here about 2 or 3 months ago, and it's becoming weaker against the S&P 500. So here's the thing I think with this telecom. I think you just gotta not do it. It's got a 56 checklist, which in my book is not good enough because we want to see a stronger. We before we enter, we want to buy the very strongest things that we possibly can in the best groups that we can buy. That's the reason why Macy's is so good because it's in such a good group. Now let me kind of show you why. Now normally I wouldn't buy a department store, but because of the way it has moved, I want to show you this. This is actually a very good buy. So if you're looking at a big kind of company that everybody's heard about that might be good, this is Macy's because the department stores currently are number one out of 197. So in terms of all the groups in the stock market right now, the number one group is department stores. So that's where I want to be. I want to be right in the department stores. So as you can see, we came right above that buy point. We've moved through the buy zone. Now it's a little bit extended. I did buy it at kind of at the last point that I could actually buy it. I bought it. So that's kind of when I want to show you the difference between a T-Mobile, for instance, and a Macy's. Now the checklist on Macy's is an 89. The only thing that that is lacking is that relative strength line. It's below 80, but it's very close. I mean, the earnings per share, but the relative strength is 97 on this. So what I'm trying to say here is, Mikey, is that we want to try to find the very strongest candidates that we can, and when we're moving into stocks, and then when they start to falter, then we kind of got to just pull the plug on them. It's kind of like shooting a horse that's gotten a bad leg. So that's kind of how I play it. I look for the thoroughbreds. I try to find those thoroughbreds, try to jump in on them, and then if they kind of fall and they break their leg, well, I get the shotgun out there, and I kind of get rid of them. All right, thanks, Gunner. Thoughts on EDU, New Oriental Education. Of course, this is a Chinese stock. I'm a little bit leery right now about the Chinese stocks, mainly because they they have they sort of have this issue with the politics in China, and of course, we can't control the politics. We're not available. We can't do that. So we're kind of at the mercy of these Chinese bureaucrats, and that could be a very difficult thing. So I'm going to kind of pull back here a little bit. You probably don't want to buy this stock because it's got a one relative strength, and maybe it will reverse, but maybe it won't. You just don't know if it will. Let's see if I can pull back a little bit here and get that in there. There we go. Okay, so kind of zoom out there a little bit. There we go. All right. So basically, the problem with New Oriental is you can see it fell way below this 200-day line. Now, the 200-day line is very, very critical. You don't really want to buy a stock that's below the 200-day line, or at least if it's below the 200 line, you better make sure it's reversing. That's not what I'm seeing here with New Oriental. What I'm seeing is a downward trend, and it doesn't look good. We've got a relative strength of one, and this relative strength line is just on the floor. Now, there was some buying here, so it's not all bad, but I just think with this New Oriental, I mean, maybe there's a lot of buying going on. Definitely it's up 26%, but 26%, it's and I think it's maybe you could make some money here, but I just think it's too risky and I wouldn't be in it. Look at that chart. This is the weekly chart. This is a terrible, terrible chart. Now, it's true, they did just come through earnings. Their sales were up 29% and their profits were up 11%. So that's excellent. The funds are 49% in here and they do have cash flow. These are all good things. But this chart is horrible. You just don't want to buy a chart like this. So, my advice here, and it's just advice, I mean, I wouldn't buy this one because typically I buy on technicals and fundamentals, but I sell in technicals. So right now, if this had a great story and it had great technicals, then I would buy it. But it doesn't have great technicals. It has terrible technicals. So that's a strike against it. So I probably wouldn't be a buyer of it. I probably wouldn't be a buyer of this one. I just think you've got to be super careful when when you're getting into these stocks. And also, another thing about the Chinese stocks that you've got to worry about, and that is, Jack Ma disappeared. I don't know if he's back now, but he kind of disappeared, and the CCP, disappears these people. So you got to be careful. I'm just saying you got to be careful. And there's other better merchandise out there that you can definitely make money on. So be careful with the Chinese stocks, really. Just be careful with them. I'm not, nothing against them. Just be careful with them because they kind of have a life of their own. Thanks, Matt. Let's look at CPRI. See if that's in there. Okay. CPRI. And that is Capri Holdings. And they're in the United States. And this is in a good area. Boy, look at this. This is strong. This is a strong stock. I like this. I've been, interestingly enough, this has been on my watch list, and I definitely think we are in a very good place for this. I'm going to zoom in a little bit more on that so we can kind of see it. We can kind of see the action on it. So let's kind of pull over here to the action on it. it's not got a 96 relative strength. That is incredibly good. The 96 are incredible is incredibly good. Look at their earnings up very strongly, 237%. Let's see if I can get it to there we go. 237%, just very strong. It's in a buy zone out of this cup with handle. Then this is what they call a base on base. And this is a first stage consolidation. This is absolutely viable. And this is a great question. Let's look at the checklist. The checklist is excellent on Capri. And so CPRI 89 checklist, that is excellent. Anything more than 70% on the checklist typically is excellent. That's why I like to see 6 out of 9 on the William O'Neill checklist. And by the way, the William O'Neill was the founder of CanSlim. So that's the trading system that I use, by the way, is CanSlim. And he is the formulator, the original formulator of it. Of course, he's retired now, but many of the top traders in the world use this. And I love this checklist because it kind of smokes out the good ones. So Capri, I definitely like this. I definitely like this. I think it's a winner. And I just even though I think it's a winner. It's in the apparel clothing manufacturing, 56 out of 197. So this is an improving area. Definitely like this one. I definitely think you can put this on your watch list. Now, this is buyable right now. Capri is buyable. It's in the buy zone. So if you do buy it, here's the thing. Always remember when you buy it, try to set a stop loss about 6 to 7% below where you bought it because these things can pull back. And unfortunately, when they do, it can be it can be very painful if you're not if you're not completely strapped in with the stops. I always use stops, and the reason I do is just because I can't watch everything. I have a lot of positions, but I love to use stops. But remember, if you do enter the position now, here's the thing on the position sizing, and I just wanted to kind of indicate this to everybody. Think of your portfolio kind of like a pizza. Okay, there's 8 positions in that pizza and eight full positions. So what do I mean by that? Well, if you go into any particular stock, never try to buy more than one pizza slice at a time. So if you have an $8,000 portfolio, let's just say that because it's easy, that will divide up into 8 individual pizza slices. Okay, each pizza slice is one full position. So never try to buy more than one full position at a time. The reason is because you want a pyramid into a stock. Now, I recommend buying a half position and then maybe a quarter and a quarter coming up to a full position. So if you're in with Capri, I definitely think that you could probably do a full in a half position on this. And then this is a good stock. It's acting very good, very well, and it's in a buy zone and it's in a good area. So it's checking all the boxes. I really like it. Thanks for bringing it up, Matt. Appreciate it. Your thoughts on Snap? I did sell Snap today, not because it was really underperforming. I still have a spread on Snap, but I did sell the shares just to make room for. I basically what I did is I bought more Macy's because it was just reacting better. But Snap is looking very good, and the internet content area is just really improving. This is one of the best areas in the market right now. So it is definitely in a buy zone. I just want to say that it's moved above this consolidation line, and as you can see, it's a second stage consolidation. 73.59 is the buy point. So this is an appropriate place to buy it right here. Now, why did I sell it? Well, the reason I sold it very simply is that I wanted a little bit faster horse. I didn't lose any money on it. I actually made money on it, but I didn't want to wait around as long as it might have taken. Earnings per share is up 211%. So this is definitely a top performer. I mean, this is absolutely definitely a top performer. The last earnings that we just went through, sales are up 116% and the profits, and that's the key, 211%. So that's looking very good. And you just everything is good here. It's starting to turn the corner in terms of profitability. We have 3%, 3% cash flow, which is excellent. We have about 15% is owned by management. So and we have nice fund sponsorship in there. Matter of fact, I kind of want to look at the fund sponsorship. This is something I always look to see because we're kind of like little. I view myself as sort of like a little minnow, and I'm just following along, and I want to follow along with the best of the best. So I'm looking for the best fund. So let's see who's in it. Well, Fidelity Contra Fund is there. That is like that's sort of like the good housekeeping seal of approval. So I definitely recommend that. Harbor Mid Cap, that's a pretty good one too. Janus, any Janus funds are excellent. These are all excellent funds, by the way. So let's see. We kind of take a look at the fund ownership in we have some very good funds in here, lots and lots of them. So these are all very, very good funds. Um, so yeah, definitely something that is looking very good. So I definitely think you could definitely it's at a place where you could definitely buy. This is definitely a good entry point into Snap. So Snap definitely makes the grade here. Definitely makes a grade. So you could definitely buy Snap at this point. Now I did sell it, but it was really just only I was creating a little bit more space in my account, and I just wanted to kind of make a little bit more space. I have a spread on this one that's doing very well. Spread trade. It's a bull put spread. So it's a bull spread on Snap. And well, by the way, if you're interested in spreads. We do have a new one today that I kind of wanted to show you. Let me see if I can pull that up on the screen. I'm trying to do too many things here, but let's see if I can do that. So let's open this up and I can I can show you. Yeah, there we go. So um, if we're looking at oops, go back to the there we go. Oops. So I want to kind of show you the spread trade that I have available today. This is on Shopify, which I think is really a tremendous company. They came through. They had some just blowout earnings, and if you go to www Dallas Trading Floor, it kind of looks like this. This is sort of how it looks. And if you go down here, kind of scroll down, scroll. We do have all right. Why should it? Okay. Yeah, here it is. It's the bull put spread on Shopify. So it's a little bit down. Kind of disregard this Google one. That's gonna be coming down, but this one you might want to look at. It's called the bull put spread on Shopify. So that's the one you want to take a look at. Of course, you need first and last name and a email address, and we'll get that right out to you as well. But that's how it looks. That's it, www Dallas Trading Floor. So if you want to see that, more of that, just go to www Dallas Trading Floor. All right. Well, thanks for taking a look at that, and we'll get back to the questions. Here we go. All right. So we wanted to look at ARKG. So let's take a look at ARKG. All right. There it is. And we're kind of blown up here a little bit, so everybody can see it. Here it is. And it does seem to be let's kind of pan back here a little bit. We'll do that in just a sec. One, two, three, four. There we go. So this will kind of give us an idea of sort of how the genomic. This is, of course, is Kathy Wood's fund. It's been in this downward trend. I'm looking at the daily chart here. So if we were to draw a reversal line, I would draw it like this. It does look like we are still. Let's see if there we go. There we go. Okay, this is the reversal line. So right now, I wouldn't buy ARC Genomic Revolution. The reason why, it's because it's in a downward trend, as you can see. It's moving downward. Now, it's looking like it's starting to move up, and when it moves up and above that reversal line, that's the kind of the first place that you could get into it. But in my humble opinion, we want to see it move above that 200-day line. We want to buy it right as it crosses that 200-day line. So I'm going to set another alert on that, and I'm going to kind of look to see exactly where that it crosses that 200-day line. So right now it's going to cross the 200-day line at about 89.60. So what I'm going to do here is I'm going to set a at 89.60 is where I'm going to set the reversal. So I'm going to put a little note in there. It's going to be reversal above 200-day line. So I don't have anything against this, but right now of I would not be a buyer of ARC Genomic Revolution. I just wouldn't be. Now, of course, this is an ETF, everyone, exchange traded fund, and it contains a basket of stocks. So, but right now, I think we got to watch this one. I think that's just basically how we got to do it. I think it's got to be watch listed. That's not really a buy. Now, Snap is a buy right now, but ARC G, I think we got to wait until it reverses higher. CHPT is the next symbol. Thank you very much for this. This is Chargepoint, and there's another companion one on here. Of course, this is the largest, I think, independent um, charging, electric charging station company. I think the other one is Blink Charging, and I've never traded this one. I've traded Blink. It's unfortunately below that 200-day line. So we got to be careful again. Earnings are in 8 days. This is it's setting up, but it's still I just don't I want to buy in more strength. I don't like to see this in terms of its strength. First of all, it's going into earnings. That's kind of a red flag. Also, if we look at the checklist is only a 55, so that's not really as good as we would like it. Now let's look at uh, a companion to this, and that would be Blink, BLNK. Let's kind of see how that's looking. Well, it's kind of looking the same actually. I have a reversal line of Blink charging, and I want to see it move above there, but it still is just it seems to be bottoming. It's still in the bottoming phase. So here's my humble my humble advice. My humble advice is the only one of these three that really is in a buy zone right now is Snap. So Snap is good to go, but the others probably want to watch list them. All right, we have. Thank you very much for everybody for coming in um on on TikTok. And this is a question regarding Bitcoin, and this is a good question. Do you think Bitcoin can go down? Absolutely. Now, here's how I kind of here's sort of my little cheat on Bitcoin. Um, I look at the GBTC, the Grayscale Bitcoin Trust, and the Grayscale Bitcoin Trust. It's actually based out of Chicago. It basically controls approximately 4% of the world's Bitcoin. So I like to use this as kind of my crystal ball on where Bitcoin is going. And currently, we're starting this move up, which is great. We sort of bottomed here on the GBTC. Now remember, this is an ETF and this is not Bitcoin, but this tracks Bitcoin because it's 4% of the Bitcoin. The GBTC bottomed at 2401, and currently it's moved above the 50-day moving average. It's pulling back to the 10-day line. Now, here's where we could possibly buy this. We could buy this if it bounces off of this 10-day line. So I would look to possibly start looking to acquire Bitcoin I mean GBTC at about 38 because I do believe that we are seeing a very nice movement up here. We bottomed and now we're moving higher, and we've moved above that critical reversal line. So, and we're above the 200-day line. This is kind of checking the boxes for me. I don't want to buy something in a downward trend. I want to be very, very careful about buying anything when it's in a downward trend because When it's in a downward trend, there's a propensity for it to continue lower. So by buying it as it reverses higher, that's a good place to buy. Also, that's a, but the best place to buy is after what they call a basing period, which creates that cup, the cup with handle, the 3 weeks, the double bottom, and those kind of patterns. Those are the first tier buy points. The second tier buy points are the reversals. I typically don't like to buy anything below the 200-day line. Now, looking at Bitcoin in directly, here's how I would invest in Bitcoin. I would consider possibly starting a position in GBTC because it does appear, at least from my charts, that Bitcoin is going to hold its current. It's gonna hold its current levels, and it may go higher. So that's kind of my take on it. But I really appreciate it. Let's take somebody that hasn't had a chance. DraftKings. Okay. Thanks, Gunnar. DKNG, of course, is the symbol. This is a very volatile stock, but they're in a great area. Sports betting, sports gambling. I think is a really good area to be looking for potential potential in. So I'm going to just zoom in a little bit on this. Right, there we go. Kind of move in. Just kind of show you how the action on this. We've reversed higher on um, we've reversed higher on on DraftKings, which is a very good thing. This black line here that I'm showing, we've moved above the reversal line. That's kind of I'm just going to kind of reactivate that line so you can see it. This is the reversal line. So we have reversed higher, but it's been a relatively weak reversal since about the mid July. But now we're moving above the 200-day line, which is a very good thing. So we're starting to see some strength come in. The relative strength is a little bit low. It's 66. I'd like to see it at 80, but it's been pulling back. So you can't have everything on this. Is it viable? Well, yes, it is. It has reversed, but this is not extremely powerful because you can see there's some resistance right here at that 200-day line. The 200-day line is a very key indicator because the 200-day line is typically where we see is the stock in general moving higher or lower. Right now, it was moving lower for the last few months. It was underperforming the market, and now it's just at the market, performing well at the market. So we possibly could look to start building a position here. The checklist is pretty good on this one. 67%. This is my minimum, but I typically like it. It does have some issues. The earnings per share rating is less than 80. I really like to be in the top of the earnings per share and the RS rating, the relative strength, and this is really what I look at, is less than 80 as well. So not as good as I'd like to. And also, it's 15% off its all-time high, which is understandable because it was below the 200-day line. So all this gibberish, like is it, Jim, is it viable or not? I am not as inclined to buy it at this level just because of what I'm seeing. So let's see if we can. Let me see if I can look at this and kind of get some more information on DraftKings that might be helpful. So I'm going to look to see kind of how the sales are doing, and I do think that they've had some very profitable quarters, and I do think that you know that yeah, here we go, June. They're still losing money in terms of the profits, but look at their sales, 320% up. That's what you want to see. We still have negative cash flow. So my take on this is, we're starting to see this may be the beginning of a good place to start building start building a position in this. I would not go in with a full position. I would look with possibly a quarter position at this level, see if it moves above 60, then I would start piling in because you can see the general trend. You see it pulled back, it's forming this base, and it will go higher. So my take on DraftKings, if you're starting to build a position, this is a good place to build a position, but don't go in with all guns blazing because that could be an issue with DraftKings. I mean, because it still has not. It's just now pulling above that 200-day line, so it's just now moving from a downtrend to an uptrend. We want to start to buy as it moves into that uptrend. So I definitely I'm moderately bullish on this based on the chart patterns. So that's kind of my take on it, Gunter. I think it's a good stock, but I just wouldn't put all my eggs in one basket on this one at this point. LTHM. Let's look at that. M and Levant Corporation, Philadelphia, produces lithium. Oh, okay. Well, this is interesting. The lithium miners. Here's the thing. I just can't get too behind all of these lithium miners. Now I know that it's the mining, it is going to be a big deal. We are in the chemical specialty area. This is an okay area. Very good. The miners have been doing very well. It's in the top 20% of all the sectors right now. And we definitely have seen all of a sudden we've seen some very excellent profits. Their sales are up 57%. Profits are way up. Now the question is it viable? Well, it came above this it's in a consolidation, and this is a base pattern, which is a good thing. But the RS line is pointing down. Here's the thing: the earnings per share. Can you buy this? I think you could. I think you could start building a position. It's got a very strong checklist, 89%. So that's looking good. The question is, I wouldn't put again with this. I would want to see this thing move a little bit better. I want to kind of look because this is a because this is sort of a commodity play. I want to see kind of where where the competition is in this area. So I'm going to look at the I'm going to look for the competitors to this to this group. Let's see if we can get that. I think it's number 44. And I'm just what I'm doing here is I am yeah, I think there we go. Chemical specialties. So I want to look at this Levant Corporation based on its competitors. This is the whole group in general. This is the whole group, and it is doing well. But I want to see the top stocks in here. It looks as if, in terms of this area, I mean, it's the normal, it's the it's the usual suspects. It's WR Grace, Lindy. This is a air. They make air distillates. So the question is, are we buying the very best stock? Well, let's take a look at WR Grace. I want to see how these guys are doing because this is the company that I know the most about in this area. This is an industrial play. Boy, that's very, very flat, but it's in a buy zone. Manufacturers count silica based. Interesting. Okay, well, there is definitely investment in this area, Nico. Definitely. But I just don't know the lithium plays. I don't know. They just seem to be a little bit. It seems to be a little bit difficult in that area. So I am not as on board on that area as I think I need to be. Okay. Let's see. Sold token. Nice. Okay. I'm just looking. Oh, what about PayPal? Okay. Well, let's take another question from okay, let's look at docus. Thank you, Jay. Let's look at DocuSign and AMD. So let's look at Docu first. And there we go. DocuSign. See if we can kind of pull it in there. Right. And with DocuSign, kind of pulling in here a little bit so we can kind of look at the action. I'm going to be, there we go. I had a lot of DocuSign. I was shaken out. I was shaken out of DocuSign. We moved above, but it is still in this area, this third stage consolidation. Now, here's the thing: when you get to a third stage consolidation, it's not as good of an area. I did buy a full position in this. I did sell it though. I did sell it when it didn't move higher. I typically will buy something and then if it doesn't move within about 2 weeks, I typically will sell it. That's the case here. This is looking at the weekly chart. So let's look at the daily chart to get a better idea. So I'm going to move over here to the daily chart and take a look. All right. So here's the thing. I was stopped out 299.98 here, and that's kind of I haven't been back in. I still like the action. We're still holding above that buy point. That buy point is holding very good. So can we be in this stock? Well, I'm not in it currently, but I still think it's an excellent stock, and this is very much an investment quality. Um, but right now, I want to see it move a little. I want to see it a little bit more power on it, but I definitely think you could buy it at this level. Relative strength of 90 is excellent, so that is definitely something that you could buy. It's got a 100% checklist. This is extremely rare that a stock has a 100% checklist. So my point, my take on this, Jay, is that you absolutely could go into this stock right now. You could even buy a full position with this because this is looking very strong, and it's at a good place to buy it. So definitely think that it's looking very nice. So that's definitely a viable stock, and we could definitely go in with a full position. Let's look at AMD. I took some quick profits on AMD, which I definitely like as a stock. I'm finally learning how to trade AMD. It's taken me like 3 years, I think. I've I have been after this stock forever. It's a great company. They have great products. Um, but I it was so hard for me to learn how to trade it. This is a very spiky stock. What'll happen is that it will spike and then it will pull back. So let's take a look at the chart on it. This is the this is the daily chart here that I'm looking at. But basically, what happened is it spiked up here up to 122.49. Of course, I sold it right at 116. Why? Because I had learned from my past that with AMD, when it explodes, you just keep pushing that stop loss up, and then it'll pull back, and then it will eventually it'll eventually work out. Now it does look like we're starting to see a reversal on it. It's moved above the 21-day exponential, which is good. It's got a 100% checklist, and it is just a little bit extended above the buy zone, but it looks like it is right on the 10-day line. So we could actually buy it here. This is not a bad place to buy it. And I definitely think it can move easily from 107 to 120 very easily. So it's got a relative strength of 88. Um, definitely could we definitely could buy that one. So both of these are buyable. AMD and DocuSign, right as we speak, these are both buyable. So they've both got excellent checklists, and they're extremely strong. So it's those are both buyable. Thoughts on the Chinese tech stock like Baba and Baidu now? You know what? Maybe they are going to start turning around, Jeff. But here's the problem with the Chinese tech stocks. I am a little bit concerned about the politics of them because it looks like we're going to have an issue in with Taiwan, and so I think that while these stocks may do very well, I think we've got to be very careful because there's just a lot of political stuff that we can't control, and it's just there's other better merchandise out there that's safer. I just think that now doing put spreads, doing bear spreads on BABA, I'm all on that because I do think they're going to lose value, even if they have good numbers. I want to look at BABA right now, um, even if they have good numbers, because and I think the chart really bears this out. I mean, it was way up here at 319 back in right before the new year. It was just doing great, and then it made this march lower. You can see this is the death cross. The 50-day, the 40-day line moved below the 200-day line. This is not good, and then it's just continued downward. So it's got a relative strength of 5. Now maybe it will bounce, but right now I think this could easily go from 150 to 50. So I'd be very careful, very careful with this kind of stock right now. I just would. It's the Chinese stocks are just they're just having an issue. I mean, so I'd be very, very careful. All right, what's the average time you hold an individual stock? Thank you for that question. This is a question coming from TikTok. I typically hold, and I have different kinds of portfolios. I have position portfolios, and I have swing trading portfolios. But in my swing trading portfolios, I typically hold stocks between their earnings. So I will typically hold them for no more than about 90 days. My average is about 45 to 50 days that I will hold a stock. And so what I'm doing typically, my dream stock for the swing trading is when it comes out of strong earnings, then I will buy in and then I will let it and then if it moves well, I will just keep pushing that stop loss up and eventually I'll get to the next earnings and then I will sell it. Now I typically don't hold stocks unless they're up at least 10% through earnings. And the reason why is because stocks, no matter how good they are, have a tendency to pull back after earnings. Why? It's just a question of, you know, buy on rumor, sell on news. Even if the news is good, sometimes it may not have been good enough, or they wanted to take their profits, or whatever. So that's how I do the swing trade. I look for the best setups that I can find. These are either the reversals, the base, and right now there's a lot of very very good setups. I buy those as they're moving higher, and then I push that stop loss up. And then when it comes time for earnings, typically I'll be a seller. And then if you do it this way, you can generate, 5 to 12, 5 to 10 to 12% on your portfolio a month. I mean, I've done it, and it's not now. Is every month going to be that good? No, but a lot of them are. So that's a great way to go. That's how I trade the swing trade. Now, if something becomes really good, like an Nvidia or something like that, then I'll move it into a position trade. Well, where I will move it to essentially a different portfolio and sort of age it, kind of like a good wine or something like that. So that's kind of how I do it. And then to get the long term moves, I use spread trades like bull put spreads, bull call spreads. And by the way, we have some very very good ones out there if you want to take a look at those online. And they're available at www Dallas Trading Floor. All right, so let's take a look at Austin Alibaba. We went through Alibaba. Let's look at Byron's ANF. ANF. I don't know ANF. Let's look at ANF. ANF. Abercrombie and Fitch. This is a really good one. Thanks, Byron. Thank you for this. This is the kind of stocks that you should be looking for right now. Why? Because the retail apparel and shoes area is doing incredibly well. It's 14 out of 197 in terms of the ranking. I like to be in the top 20% of all the rankings out there. And right now, this is doing well. So what has happened is it's bottomed. The stock has bottomed at 34.36. It looks like it's gotten some nice support there, and it's moving higher, and it's above that 40-day line, and it's moving higher. It probably won't see a lot of resistance until it gets to 47.29. That's what I'm seeing here anyways. Let's look at the weekly chart to kind of take a look. Well, I'm going to kind of zoom in on that a little bit. Hopefully that works. There we go. Moving in about 250%. Wow, that's a lot. Okay, so we can kind of see the action. This is really what I'm trying to show here, so you can actually see it on the screen. This has got a relative strength of 97, which is excellent, and the relative strength line is pointing up. But this is a absolute red flag right here. Earnings are in 2 days. We don't want to buy this before earnings. We just don't. We want to wait until after earnings. So right now, Byron, on this one, I think you're going to have to hold off on it, see how it comes to earnings, and then buy it. I don't think it's a buy right now, not because it's not doing well. It is doing well, but we don't want to buy it before earnings. You want to go into earnings. If you're owning a stock, you want to go into earnings with a cushion of about 10%. And if you don't have that, you then don't want to necessarily hold through it. You want to sell it. Also, if you're looking to acquire it, you don't want to buy it into earnings because earnings can be a problem. As you can see, we've had situations where they've gone into earnings. It's moved up. Now, if after earnings it gets a bounce, then that's a good place to buy it. but don't buy it before. So this is look this is Abercrombie is looking very good. It's got an 89% checklist, which is excellent. So we can get ready to buy this one. I just wouldn't buy it today. I would wait a little bit and see if it comes through earnings well, and if it does, then I think we can definitely do some. We could definitely buy it. Okay, Target. See, kind of. There we go. Okay, so let's look at TGT. I'm adjusting my screen here a little bit. Yeah, there we go. Okay, so TGT, and so with TGT, we've pulled back to that to the 50-day line. Of course, when we're looking at the weekly chart, it's the red line is the 50-day line, and we're looking at the daily chart. It's the 40-day line. So let's jump on over to the daily chart. It looks like we got some support right here on the 40-day line on the daily chart, but it does look like we're seeing a fair amount of selling activity. Just looking at the volume here. We went through earnings; they were up 8%, but obviously the street wanted more. So it looks like it is starting to bounce and pull back here a little bit. But I think the midterm the midterm optimism for this is pretty good. I mean, it's a 67 checklist, but I think that there are better retail targets out there. Now, Target has been one of the ones that has done well. Now, this is in the sort of major discount chains, sort of related to the department store chains, but and it's doing well. But I think that you might want to take a look at the number one category right now, and that is the retail department stores, and that of course is Macy's, and that's where I've been buying right at least for right now. I started buying it as we started to see it move right after earnings. It did very very well. The earnings were up 259%. So here's what I consider doing. Instead of doing a Target, consider doing a Macy's. Not only is it a less expensive stock, but it's looking better in terms of its strength. It's also got an 89, but the sector for the department stores is number one, whereas with the discount chains, it's only 17. Not I say only, that's very good as well. But Jay, I think that with Target, I would not be acquiring more Target right here. I would probably be looking to replace with, at least for right now, I would be looking to replace it um, with something like Macy's. Absolutely. All right, I think we have about one more question here. And this is AMC. I want to be famous. Hey, I can buy followers. All right, let's look at Hans. Thanks. Let's look at AMC. Of course, this is the king of the meme stocks, AMC. So let's take a look to see kind of what's going on. These are tough to play. I'll be honest with you, and I'm certainly not the best one in that category. But let's kind of just zoom in a little bit on AMC to see kind of what's going on. All right. Oops. There we go. All right. I'm going to kind of move it up so you can see it. And it did reverse, and this is key. It's just reversed, and then boom, it's above that 40-day line. The question is, what's happening here? Is it even viable? Relative strength is 99. Well, with this stock, my charts are not going to be as descriptive because there's so many people that are in the Reddit groups that own this. But the checklist on this isn't bad. I mean, it isn't bad at all, really. So it is buyable. But the question is, would I buy it? Well, gosh, I don't know. I think it may be starting a movement higher again. It's just very very strange as to what this do. I just think that with this one, I definitely, if I bought this, I would be pushing my stop up aggressively, and it probably is viable here. But gosh, I'm a little bit, I'm a little bit, I'm a little bit leery to do it. I'll be honest with you. I am. More power to the people that are doing it, but I am just a little bit leery. Let's look at crowd, CRWD. and CrowdStrike Holdings, and I did have CrowdStrike. I did sell it, of course, and when it pulled back, it shows my position in here, so let's take a look. Yeah, I had it. I definitely pulled a full position. I had my stop loss at, I bought it at, 163. I had the stop loss at 251. It triggered my stop loss, so I got stopped out of this, and now it's starting to move once again above the buy zone. So it's not extended. You could definitely buy it here, but I would be careful because, it does have these nasty pullbacks, but the relative strength line looks good. The computer software security area is doing very well. It's 39 out of 197. So it definitely passes in that. Let's just take a few more looks here. 89 checklist. The industry sector is good. 39. That's looking really good. So I definitely think you could buy CrowdStrike here. Definitely could buy CrowdStrike. AMC, eh, I'd probably be a little bit more careful with AMC, but I definitely think you could buy CrowdStrike. Well, we're come to an hour here. Thank you, everybody. I'll be back tomorrow on the same, is he to say same bat channels, same bat time, same bat channel. I don't know. That kind of dates me, but we will be back tomorrow, and so hopefully everybody will have a good trading day. The Nasdaq is an all-time high. It's a very interesting time in the market. It almost always is. That's one thing that the market always gives you opportunities. So if you want to get on that. On the action trade alerts, we do have some very nice trades. We have again, we had the spread trade, and it's available at www Dallas Trading Floor. Um, uh, Spread trade, you just kind of scroll down and you'll see it on Shopify. And I do think that Shopify had some great earnings, and I think the spread trade is a great way to participate. The problem, of course, with Shopify is that the stock price is about $1,500, so tough to buy more than a few shares, but the spread trade is a way to participate, and it's not nearly that much. So that's available at www Dallas Trading Floor. And so thanks everybody. I will be back on tomorrow at about 2:30 or so. And thanks for taking a look.